with yourself, Brian. If you want to give a brief 10, 20-second intro for the audience, that'd be great. And then would love to hear, following up on Sunday, the general gist of what you said was you are following the trend. You are a trend trader, and the trend is bullish at the moment. But you are also looking at the moving averages and seeing that we are below certain ones. So that stops you from taking aggressive bullish positions at the moment. That's, kind of the very high level takeaway. But let me turn it over to you to get some of your thoughts here.
Oh, I think you must have taken notes or listened carefully, Gav. That's exactly what my position was Sunday night. And here we are Tuesday afternoon, and we are right now, obviously, seeing a strong resilience and snapping up shares of this market right now. And we're back above that 5-day moving average that I was referencing. So we're at an interesting point because the 5-day moving average is declining. So to me, that says we're likely to pull back slightly, maybe tomorrow morning, and then we'll see if this can continue higher. But it really sets the stage for higher prices to continue. What we're at right now in both the S&P and the NASDAQ is the anchored VWAP from 2 weeks ago, the high that is. We're pretty much right on them. So this is a logical place for the market to just slow down, pull back, the SPY maybe to 435, 35 and a half, the NASDAQ down to 363 or so, and then paves the way for continued strength. There's a lot of these stocks that were, in pullback mode that have settled in near a rising 20-day moving average, near the anchored volume weighted average price from the mid-May low. And we're seeing, the buyers come back in. Bitcoin's holding on to its gains. There's a lot of good activity in stocks like Riot, Mara, CLSK is another one I've got a little bit in. So I'm really encouraged here.
Yeah, love that off the bat. So real quick, it sounds like, we're looking at the indices popping back up. Specifically, we've been all watching tech. There's been the argument that we talked about, 7 stocks are carrying it. We talked about over the last 3 weeks, that's broadened out. What are some of your favorite names that have maybe not participated in the rally all the way through, but have started heating up, are leaning into the trend, and are technically sound in your eyes?
Yeah, one that I've spoken about a couple times is ICE, Intercontinental Exchange. That was too much of a word for me, I guess. But, you look at the weekly chart in Anchor VWAP to the 2021 high. We had been below that. It had been holding as resistance. And we just launched above it about 2 weeks ago on some pretty good volume. And we're consolidating. And as that consolidation occurs, it's also above, the normal, horizontal prior resistance in this 108 to 111 area. And that resistance seems to be holding a support so far. Today, the stock is showing a little bit of signs that that this little pullback is beginning to undergo accumulation, and that the buyers are very close to taking control here. So I think this is a stock that I'll likely look to buy after a little pullback and then some strength, and I would most likely have my stop underneath yesterday's low. So that's one that looks like it's set up for a nice swing trade position. ACLS, I bought a little of this one today. This is a semiconductor equipment company. So, those guys typically lead the semis, stocks like Applied Material, KLIC is another semiconductor equipment that just started going back up again today. If that one were to pull back 57.5-ish and then begin to rally, I think you could, set your stop under today's low. And I'm talking about, of course, for a swing trade. That's my time frame. So, semiconductor equipment manufacturers, and, that equates to obviously the semiconductor index is also behaving well. If the SMH would pull back down a little bit under 150 and then begin to move higher again, that would set the stage for probably a retest of the prior highs, stop below yesterday's low there as well. So, that's where we want to see the leader. Still early in Applied Materials. I know everyone likes that stock, but it's just not the leader here. It still needs some work to do. Even Intel looks like maybe it's, finally turning the corner. That one is back above the 200-day moving average, and that 200-day moving average is finally rising. It had a strong rally, pull back to the 20-day moving average. So I'm looking at that one. If that pulls back 3350-ish and then breaks higher, to get involved, with a stop probably about 3270-ish. And those are, like I said, for swing trades. BRZE is one that's setting up, and they just reported earnings recently, had a real strong reaction to those. It's above the anchored VWAP from the IPO and is holding above that. And like I said, I'm long some MARA, I'm long some Riot. I've started a very small position in CLSK. It really doesn't meet what I'm looking for in there. I was just kind of taking a starter position, but that's one that has explosive upside if it gets going. So, and then I've got a little bit of this SOUN, Soundhound AI, and it's early for this one. I think maybe by Thursday or Friday that BBAI will be in a position to make a pretty explosive gain.
Okay, playing the AI theme, that definitely makes sense. One name I just got to get out in front of it because they're having a pretty good day, and we've talked so much about it today, is Tesla right now. Kind of got a little bit of the pullback after the initial run. How do you read a chart like this, which is, well above a 200-day, a 50-day, a 21, right? It's significantly above a lot of those. If you go in and you tag the Anchored VWAP, gosh, I thought I had an Anchored VWAP to all-time highs here. But if you tag that Anchored VWAP to all-time highs, we're above that too. We kind of powered through that back on the 5th of June. Would you be looking for this to have a little bit more of a retrace down to that VWAP, down to a 21? Or how do you read a chart like this on the daily?
Well, that one, I think that it's trying to stabilize today because we made that little higher high above yesterday afternoon's level, but it's below the declining 5-day moving average at about 256. And at that 256 level is also the anchored VWAP from the high on the 21st. So, this year's high, if you anchor to that. Those are both coming down on it. So if we were to get a rally, continue up towards 255-ish, I wouldn't expect it to be able to power quickly higher through there. It needs a little bit more time, and it's also holding right here the month to date anchor, as well as that 20-day moving average. So this is a place where it's clearly on the daily time frame, a place where it's supposed to find support, and now it's trying to do so on the shorter term time frame, but it's not quite viable for me yet because that declining 5-day moving average and that anchor off of last week's high, which is, of course, the year-to-date high as well. So I think it just needs a little bit more time to, consolidate these recent gains from, the big move from 160 to 270. A little further time correction wouldn't be a bad thing for it, but the trend is clearly higher. And, where we ran into, Gav, is also, that 270 level. That had been a pretty pivotal support area last year this time. So I think it just needs to consolidate a little. The easier, quick money has been made on the upside in Tesla for at least a little bit. It just needs a bit more of a pause.
Perfect. What about the crypto names? You've mentioned the AI theme, right? Trading around NVIDIA, C3AI, SOUN. But when you look at some of these crypto names, Mara is actually having a breakout today. I would love to take a look at something like this, coming up to levels not really seen since November. These are still stocks that got beaten down. I think people have to remember too, right? When all of the market started to rally back in really October, a lot of the market started to rally. Crypto was still falling all the way until January. That's when that started to turn around, pumped a little, stayed stagnant, and now appears to be breaking out. You can see setting new 6-month highs right here. Curious on your thoughts on a stock like this and Coinbase and some of these others.
Coinbase, I'm not as bullish on. I just think it's a difficult name to trade. There's too many gaps all the time in it, and there's too many eyes on it. So as I mentioned, I'm long Riot, I'm long Mera, and I'm long some CLSK. So I've got calls in Riot, and I've got stock in. Well, actually, I have some stock in there as well. It's small. I have a more substantial call position in Riot. And that's going out, 2-3 weeks here. I like the fact that there are, 25 million shares short. this stock. That's down from the high of 33 million just 3 months ago. But still, it's the trend for the shorts. They're not in good shape, basically, and even more so in Mara. That if you look at the dollar amount sold short, it's at an all-time high, or at least for the last year. So the number of shares is down from 51 million to 41 million, but the dollar amount at risk from those short sellers is at about $516 million exposed. So that's encouraging and helpful there. And that clean spark is just a little speculative one that I think, if that one can get going, it could be, it's probably a few days early. I've got a little bit of a starter position, but I think the risk is, to yesterday's low. So I'm a little bit early in there, but it's got a nice weekly chart. And it's these names, I traded them the last cycle with, up cycle, and they can just do some crazy stuff to the upside. So I'm kind of excited about these and these little AI stocks.
Yeah, I'm definitely keeping my eye on them with the breakout here. Brian Lund, I want to pull you into the conversation. You want to give some commentary to what Brian spoke to, and then if you have any questions or thoughts you want to throw out towards his way.
Yeah, I think Brian covered it pretty well, and I actually just want to expand the idea a little bit. So, obviously I'm active like everyone else is and somewhat short term. But what I've been doing lately is I've been thinking to myself, what stocks will I look back 6 months, 12 months, 18 months from now and say, God damn, why didn't I get in those stocks? And so one of the things I've been looking at, and it's ironic that Brian's on this call because it kind of goes from his first book, Technical Analysis Using Multiple Timeframes, which I would highly recommend everybody get. Is there's a different 4 different stages in a stock's life, and Brian talked about this in his book. There's accumulation, markup, distribution, and decline. And this is, I think Brian would tell you, this is built off of Stan Weinstein's original work. And so what I'm trying to do is I'm trying to look at stocks that I think are coming out of that accumulation phase and are very early into the markup phase. And the idea being that they would have a nice run if you believe that the market bottom is in, which I do. Now, one of the ways I try to identify these, and I'm not sure Brian does it this way or doesn't, so I'm not going to say this is the way he does it, but I want to see a stock that's made a strong move and is pulling back and holding at the 50-day moving average, but is above the 200-day moving average. And if you take a look at a couple stocks out there, and I'm not going to say these are exactly the perfect examples, but one is DOCN, which actually was given, I got a heads up for that from Chris Peruna, who's a friend of mine. That's pulling back to the 50-day. It's above the 200 and it's holding, right? Another one, AI, right? We're talking about AI stocks. So same sort of thing. It's above the 200. It's pulling back to the 50. I use the exponential moving averages. So if you use simple, it might be a little bit different. So what I'm trying to do is, in addition to looking at what's in front of my face right now and what's moving, I'm trying to put myself in the position, 6 months, a year, 2 years from now, saying I don't want to miss out on some of these things that I think have been beaten up and could have really big moves. So I just encourage everybody to kind of expand your time frame a little bit. You can work in multiple time frames at once. You can trade right now while you're still thinking about what some of the bigger movers are. Obviously, you have to enter and exit them based upon technicals, based upon price action. But that's what I've been thinking about lately.
Love it, Brian. A lot of those names. Look at Breeze, BRZE. Came down from that. And I always repeat this phrase because it's so true. If they don't scare you out on the way down, they often wear you out. And the scare you out is the stage 4 decline, and the wear you out is the stage 1 accumulation. So, waiting, all these little rallies that have occurred over the last year in these beaten down names have failed, and mostly they failed with a declining 200-day moving average. Now we are in a different position where these 200-day moving averages have flattened out, as Brian mentioned, and we're above the rising 20, 50, 200-day moving averages. That means we've, basically rinsed the cycle, that we've rid the sellers, the longer-term sellers, that had, and here's sometimes the psychology of it. At the end of, 2022, a fund manager gets fired because their fund was down so much. And then what happens is the new fund manager comes in and says, I'm going to clean up all this bullshit in this account, all these stocks that are down. And they're going to be sellers until, incremental sellers over the next 6 months till they get out. Well, that reduces the supply. At the same time, they're going to look at a stock maybe like DOCU or BRZ or CLSK or some of these ones with nice long-term accumulations and say, I'm going to start building a position in these. So I have a good low-cost basis, and these are my ideas that I'm going to ride higher. So there's a lot of those ideas out there that are set for, I think, really big runs. And this is, something I've been talking about to subscribers every day is that, I'm a swing trader, but these ideas, look at Equifax, EFX, that is, a beautiful inverted head and shoulders pattern on a weekly time frame. And, it's it's Equifax, but I wouldn't be surprised you look at this thing at 6 months and it's 280, 290, and here it is at 228. So those are the ones that have the potential to sustain bigger rallies, and they're behaving just the way they're supposed to, pulling back to rising 20-day moving averages, refreshing, and then seeing the next move. And in 2 to 3 months, maybe maybe 6 to 8 weeks, we'll see deeper pullbacks to the 50-day moving average, but then we get a bounce there as well. So they're behaving just the way they're supposed to.
And if I can just add on to that, if you're on the spaces, it means you survived 2022, right? So you already went through all the hard work, right? So having gone through all that hard work, having survived, hopefully having gotten better at your strategies or methodologies, your risk management, it would be a shame if you didn't benefit, right, in the next 6, 12, 18 months from some of these stocks that you maybe watched implode and then go the other way. So again, I know we sometimes get caught up on what's happening today, what's happening tomorrow, and that's great because we want to manage our risk in real time. But I think it's important that we think, okay, I believe the worst is over. And if the worst is over, where could we go and how could I really take advantage and really, in a way, get kind of paid back for having to sit through all the pain in 2022.
And if the worst isn't over, then learn to use stops. Right now, it looks like it should be able to continue to move higher, but it only ends badly for people who don't manage risk. And it ended badly for a lot of people in 2022. And they, learned hopefully those lessons, as you mentioned, Brian. But, just because they look good today doesn't mean that's going to stick. Always know where your exit is and have your plan for exit based on price action. So for me, it's always, as we mentioned, on Sunday, below the most on a long, my stop is always below the most recent relevant higher low for my time frame, and I continue to trail that stop up under the new higher lows until the market tells me when to get out. I don't do price targets. I don't believe in price targets. I think they're foolish. They're made up, pie in the sky stuff for the most part.
Stock Talk or Evan, do you have any questions you'd like to throw into the mix? If not, I can bring in Michael Naus as well.
Stock Talk.
All right.
I'd love to throw Stock Talk first, and maybe just a quick, maybe one name you were trading today, and then if you have any thoughts on what we were watching today. I know you had a couple names.
Yeah, we were pretty active today. A lot of good catalysts today. I'll pin them at the top, the ones that we played. So I've talked about this before. We do a pre-market prep session where we just talk about the top catalyst watches for the day. Today we had 5 of them that all worked really well, which is rare. I mean, you usually aren't going to get every single one to work perfectly, but today with the carrying that we had in the index is obviously a great day for the indexes, which helped. But we had FYBR, which is off of the broadband expansion plan that's been reemerging, $42.5 billion from the federal government. There's been some analysts that have been kind of shaken up on that, but Wolf Research this morning with a 27 price target on that, had a nice breakout. Microsoft with Satya Nadella's comments that leaked that they're looking to double their revenue to $500 billion by 2030. ENVX, they won a purchase order this morning. That was really the best play for today. We did 400% on those contracts, but stock's up 25%, granted. So, but yeah, they won a purchase order from the military for battery design this morning. Mark Gahoda has tweeted that he was hosting a space after hours today, and people were chasing this thing all day, even into the close here. And then Unity, there were 2 AI PRs this morning on that one, and a $48 price target from Wells Fargo. And then CarGurus had a JP Morgan upgrade, which was kind of out of nowhere, and we felt like that would move the stock, and it did today. So, yeah, all the catalysts worked really nicely today intraday. They all produced really, really nice tradable opportunities.
And Stock Talk, would you say that that the continuation on a lot of these moves is due to like the health of the market? Because it seems like a lot of these things, if you
Oh, that helps a
yeah, right.
ton. Yeah, that helps a ton. But I mean, even on down days, these our catalyst watches have been working really well this year, right? It's kind of helped us find areas or spots of outperformance that don't need to be sector driven, that don't need to be rotation driven. It's just like stocks that have a reason to move,
Yeah.
But obviously, on a day where the indexes are up like this, I mean, yeah, it's going to give you extra gas, right? Like ENVX probably wouldn't have been up 25% today if it wasn't for the indexes, right? Same thing with the run in Unity, right? Like those were the 2 best ideas off that list, but they had monster moves because the indexes were supporting them.
Yeah, I just think it's another somewhat anecdotal, but it's another data point of things we've seen over the last 3 to 4 months that are acting, the market's acting different because we are in a different type of market, whether it's the reaction to the PPI, the CPI, to the Fed, to earnings, to whatever, to catalysts like you're talking about, things that normally would have moved up and then maybe just rolled over and given L back are continuing to extend. We're able to hold stocks for days and weeks now. So this is just another point for people that still think we're going to go back down and we're going to see the low. Like, we're in a different market now. That could change, but right now we are in a different market than we were before October.
Yeah, the biggest change I think we've seen in the last 2 weeks has been you are actually seeing genuine participation in other sectors. I mean, you've had industrials showing their face in the last 2 weeks. You've had spots of utility outperformance. These are good. These are good signs for bulls, actually. Seeing a pullback in the leaders, and it wasn't really even much of a pullback, but seeing a bit of a pullback or stabilization of the leaders, and then a little bit of love being given to some of these other sectors. It's actually good to see. It's healthy. But I mean, even before, I think the breadth argument, even before this rotation that we've seen in the last 2-3 weeks, I still think the breadth argument was poor before that. But yeah, that's just my view.
I want to switch the conversation back over to Brian. I know we're not going to have you on here for too long, so I did want to make sure came back with another question or two specifically. A little bit of different also to what we were talking before. I would like to kind of know more the front of like, what's one piece of advice that you would give to new investors? Is there kind of a pitfall that you see a lot of people coming? I'm sure you get a lot of questions or see a lot of things. Is there kind of an area that you're getting? I would love to kind of know that. Is it really more people? I feel like when a lot of people, new traders, they come on, all they focus on is the reward part of it, not really the risk mitigation. Something like that. Is there anything that kind of comes to mind?
Yeah, Evan, I think you nailed it. That people just see the upside, and that's what happened with all the COVID people, traders with their stimmy money that, they got involved in the, GameStop. I don't know if they're still talking about that one, but it's just been a slow bleed, which was, really, AMC more in particular. But, risk management, and don't be in such a hurry. It's such a, it took me forever to learn that. Don't be in a hurry. That, you always want to, the casino is always there. You can always bet on something. There's action available, but just slow things down. Trade super slow, super small until you start realizing, there's a method I have here and I'm starting to understand it. It's not just, hey, somebody said this on Twitter, or I saw in the news, that this company's doing this or that, or hey, the AI stocks are hot, so I'm going to chase it. Maybe you get lucky, or maybe you ended up chasing it and, buy that top tick and lose 50% of your account in one day, which, we don't hear enough of those stories, but they're out there every day. People just getting blown sky high out of the water. So go slow in terms of your decision making and your share size, and make sure you have a strategy for cutting losers. All basic things. There's nothing groundbreaking there.
And then another question. I kind of asked you this over the weekend. That was a great interview. If anyone hasn't heard it, they should definitely go and listen. But like, how do you kind of go about adding new stuff into your game? I know it's really difficult when you have a strategy that works. Is it kind of just wait till it stops working or slows working as much, and then you can kind of look around what's there and pivoting it a little bit? Or is it always kind of maybe you're spending once a week kind of back testing a different indicator or something like that you can maybe add to your game? How do you kind of go about staying with the times? I know we're going to get weird in this whole AI game and all these different stuff that might be possible coming soon. How do you kind of keep it fresh? Or is it really just, if it's not broke, don't fix it?
It's a lot of if it's not broke, don't fix it. And only because I have the luxury of decades of experience to get to the point where I'm comfortable with my strategy and I don't have to listen to what other people are talking about. I really, I've said this before, but I really don't care about anyone else's opinion. When I'm in a trade, I don't care if George Soros tells me I'm wrong. I'll say, well, George, that's great, you've done well, but I'm on the other side of your trade here because I think I'm right. And you can be a loudmouth all you want, but I'm going to let price action tell me if I'm wrong or not. And I'd say the same thing to Warren Buffett. So it comes with confidence of experience and success in that experience that I'm still curious. I mean, I just bookmarked a new little AI site today for stocks. I just got rid of one of them it's just AI stock picks. They were giving me a newsletter each day to evaluate, and I told them, no, this isn't for me. It's got they're bottom fishing in stocks and saying that they're great stock picks. And I said, well, maybe that works, but not for me. So what was the one I was looking at today? I know I bookmarked it. Where was it? I'll try to find it and maybe I'll even post it. But the caveat is I haven't really looked at it yet. So, but I'm always, the intellectual curiosity, I think, and that's what's great about the market is that we're always looking for new things and learning new ideas and adding AI stocks to my watch list. 6 months, 9 months ago, there weren't really many AI plays. Now you see, as was just point out, Unity today added, AI to their press release, and that's got things going over there.
AJ, you got a question for Brian?
Yeah, I got a question, Brian. Thank you for coming on Sunday. I think it's a follow-up maybe for the folks who didn't make it, where one comment you mentioned was, watching your emotions as you're trading, right? And then not paying attention to the P&L. But as you size up, right, and you watch it closer, the human emotion kicks in, right? So I think maybe for the new folks who are getting their feet wet and seasoning and maybe making that transition that, hey, it's time for me to size up, what would you suggest was a good learning point on that for folks that are going through that transition?
So when is the proper time to size up? Is that what
I wouldn't say
did I
when, but I
get
guess
there?
like how to effectively manage those emotions. Because I think a comment you mentioned was as you start to do that, human tendencies kick in and you start to watch it closer and closer. But how to try to kick out that emotional aspect of it as you get to size up in your trading career.
I mean, I think it's always going to be there. I don't think you can get rid of it. I certainly don't. I still, will size up in a trade. It moves against me, and I start beating myself up and saying, why did I do that? I know better. And then it turns around, and I'm like, well, I got lucky there. But it comes with if you're sticking to your process, whatever that is, and you're finding consistency with it, then there's no reason that you shouldn't have the confidence to go from 100 shares to 200 shares, 200 shares to 500 shares, risking or, and in fact, talking about risk, I wanted to point out that Brian Lund did a great YouTube. And if he wants to link that, I would encourage him to do so. About Van Thorpe's, and that's what we were talking about Sunday, Van Thorpe. And I saw that Brian did he previously did a great article about it, but he did a video. So instead of risking $100, you're risking $200, $500, $1,000. Your risk unit goes up with your consistency, and your consistency it leads to confidence in what you do, and that gives you the ability to size up.
Michael Naus, do you want to throw any thoughts into the conversation? Any questions for Brian?
No questions. Just I guess more of a thank you than anything else. So, as Brian knows, with Trade Ideas over there, I've been building some AVWAP scanners, and I think I was joking with him the other day that I'm a full AVWAP convert now after been playing with these for so long. The ability to just find the ones that are anchored from the day before a large gap or a volume spike or something like this. I think there's a huge amount of power here, and just been playing with them recently, and it's absolutely amazing because it's the beauty for people who don't know. I think of Anchored VWAP is it keeps you aligned with the trend, which we know that's what gets a lot of people in trouble, right? If you're above Anchored VWAPs for major lows or large gaps or something like that, you just have to, by the math, be in uptrends. They give you good places for stops and risk management, which everyone was talking about, and I think that helps phenomenally. And just to Brian's point about how, we may have been through the worst of the market. Now it's, our goal is to try to get the best out of the market. Just made me think of I think it was a Peter Lynch quote that's saying, if you can't survive a bull market, you'll never survive a bear. So, um, just a bit of a warning, and I guess something to discuss from people who have started their market or their trading in a bear market. Brian's right. You've been through kind of hell, and you expect for things to be hard and really defensive. But what I've noticed that can do to some traders, especially new traders, is that they always think the market's going to be like that. So they always look for the next shoe to drop, and they always look for the next problem to occur. So, if you were in that market, try to figure out a way to get yourself in a trend and to stay in a trend. And one thing that I've been using a lot, and I've really been liking, is Anchored VWAP for that as well. Looking at, and I'll let Brian explain more, but the Anchored VWAP handoff method, and just trying to figure out ways like this to stay in these trades longer. Because if we are in a new bull market right now is the time that you sit tight when you have good trades. So just been playing around with a lot of them. Again, can't recommend the book enough, can't recommend playing with this tool enough. I've been very staunchly against indicator for pretty much my entire trading career, but I'm definitely in the cult of AVWAP now, and Brian will tell you it took a long time to drag me in.
It takes, I mean, everyone's got to find their own way. And I didn't force you into it, Michael. You just saw the evidence of it. And I would encourage people to look at it, but I would never, tell people, hey, you've got to do it this way or that way. I look around on Twitter all the time, and I see some successful traders, and they do things, they buy things I would never even consider buying. And they do well with them, and I'm happy for them, but it doesn't make me want to be them. I know that I have my style that works for me. It works for my personality and my risk tolerance, and that's the tricky thing about social media, FinTwit, whatever you want to call it, is that there's so many voices coming at you all the time saying this is the best way, only trade news catalysts, only fade news, fade this, buy these pullbacks to the second standard deviation or whatever. There's so many ways to the finish line that it becomes so personal, and everyone has to look at each trade and say, just because I mentioned some of these Bitcoin plays doesn't mean I'm going to, hold on to them either. Or what's your time frame? And these are the subjects I hear you guys talking about a lot, which rightfully so. And Lund, I'm just going to say Lund because he's another Brian, he's always talking about, the time frame. That be aware of what your time frame is, and the person that's talking. Do you know what their time frame is, or are they just talking? Why does everyone get excited every time Warren Buffett buys more of this bullshit or dog shit company, Oxy? It's in a downtrend. It's done nothing for 2 years. Why do people care? Just because he's buying it? You want to sit in this stock and lose money with him when his time frame is much different. But everyone, a press release will come out, say Warren bought more, and people bid it up. It's the stupidest thing ever. It's still in a downtrend.
Yeah, and I think that's a really good point too, because for me, it was more about solving a problem that I had, not a problem, but something that I always wanted to do with my trading that I never figured out a way to do before. And I was always a very typical, relative strength breakout trader, and that's kind of was my bread and butter. And then when I started playing with anchored VWAPs as a way to kind of detect pullbacks a little bit better, that was really what it is. So I would highly recommend, especially new traders out there, if you're struggling or if there's something that you want to get into, like I was always wanting to be more of a pullback style trader, to do that, and to research these different styles and indicators and different traders that will mesh with your either personality or your goal, right? So for me, it was always hey, I'd buy breakouts and they would work, and sometimes you get stopped out, and that's just kind of the nature of it. But things like this, it's funny you brought up Breeze, BRZE, and I'm looking to get into some of that as well if we kind of close strong here today. And it was the same kind of thing. Whereas before, I would wait for this gap to break up in the 43s or so. If there's a style of trading that you wish you were better at, or if there was a style of trading that you wish you could gravitate towards a little more, then that's where I think it makes the most sense to go looking and try to find someone that has that same style, or an indicator that makes sense to you, or something to that respect, as opposed to trying to just I want to emulate this person because this person's successful and I want to be successful too. Look at it more for what's my goals with trading, and who trades in kind of a style and in a manner that kind of makes the most sense to me.
Caleb, I'd love to get you into the mix, see if you have any thoughts on what we've been discussing. Anything to run by Brian as well while we have him here?
Yeah, look, I mean, I've been on FinTwit for the past 3 years, and prior to that, I hadn't really heard too much about AVWAPs, and it's definitely something that I've implemented more and more into my analysis. Brian, I heard your appearance on the Compound and Friends. What was that? Maybe like within the last month, right? Anyways, it was a great conversation.
Which one?
Weren't you on the Compound and Friends? With,
Compound. Yeah, of course.
Yeah, exactly. Really enjoyed that conversation. Maybe as it pertains to AVWAP, I'm kind of curious how you approach maybe applying it to something like Bitcoin in the crypto universe, where that AVWAP will look quite different depending on which exchange you're using, right? So, like, for example, I've seen someone recently post something about Bitcoin getting rejected on the AVWAP from all-time highs, but they were using the Bitstamp exchange, which like no one uses. And so, like, from that perspective, like, wouldn't it make more sense to be applying that AVWAP to something like Binance or Coinbase, or even looking at BTC USDT instead of the dollar denominated pair? What are your thoughts on that in particular?
Yeah, that's a great one, and I've heard that a lot. I've been using it on crypto for 10 years or so, maybe less than that. But crypto it's kind of like stocks used to be before there was SOS. SOS was the small order execution system that allowed you to kind of pick off market makers. And now we have this large disparity between all of these different exchanges, and like Bitstamp, I don't know what the breakdown is. Coinbase might do, let's say, 38% of the volume, and they're the largest player, and it's spread amongst 30 other players out there. So which volume do you trust in volume analysis? To me, I've decided to make that question answered by where do I trade. I do my trades at Gemini for crypto, so I'm only interested in where's the liquidity that I trade with. So I will look at the chart with the anchored VWAP on the crypto data from Gemini. It might be different than the Coinbase data, but Coinbase isn't my pool of liquidity, so I really don't care about it so much. It's kind of similar to do you price gold in US dollars or in African rand? And my point always is, why would I care at all what it's priced in African rand? I'm not going to Africa anytime soon, and if I do, I'll bring US dollars and convert them into rand, but I'm not going to it just doesn't matter what it looks like in another currency, because that's, at the end of the day, I spend dollars. If I go on an overseas trip, I exchange for their currency, but I'm not interested in bringing gold to, Italy to spend. So I don't care what it is in terms of the euro. I want to know in US dollars if I want to trade gold. So maybe I went about that the wrong way to explain it, but it's to me, it's just about where's my liquidity.
No, that makes perfect sense. Another question I have, which is totally unrelated to crypto, but do you ever apply, AVWAPs to like a sector in particular and then kind of hunt within that ETF, for example? So like one of the, pockets that I've been super interested in lately has been IGV. It's the iShares Expanded Tech ETF. And so, one of the things that I've been talking about is how, look, I want to be hunting for, potential opportunities within that ETF. So I'm looking through the top holdings on that. I'm doing all my analysis there. Do you do something similar with, the AVWAP analysis and then, apply it to individual names after looking at, potential confirmation or signal on a more broad sector-based or ETF-based perspective?
I typically don't. I don't think it's a bad way to go. I mean, I think it's a great way if you're looking at IGV. It's pulled back perfectly here on this 20-day moving average. And if you're not going to trade that, you want the strongest ones in that group. The problem is that the strongest ones, probably began moving yesterday or an hour or 2 hours ahead of the IGV, and that's why it's they're leaders. They lead the sector. So to me, I'm a bottoms up stock picker. I rarely do top down. U.S. is the strongest market, so I'm going to focus there. Tech is strongest in that, so I'm going to hunt in the tech. Instead, my process is. It's more tedious, but it's actually not tedious. Tedious is the wrong word. For a lot of people, it would be tedious to look through as many stocks as I do each day. But I try to look at stocks that are, even though I don't trade energy names and I don't trade financial names, I make sure I look at a handful of each of those every day to see what's happening within the index. I'm not just interested in the XLF or the XLE. I'm saying, well, what are the components doing? Are there some that are starting to lead and show that they're stabilizing before the sector itself is? So that's my approach, but I think either way, it's less time consuming to look at those sectors and then drill down. So it's another one of those personal things. Whatever works best for that person, I wouldn't discourage it.
Thanks, Brian. That makes perfect sense. I appreciate the clarification and the perspective there. So thanks.
Yeah, great, Caleb.
Awesome. I did have another question there, Brian. I would love to know kind of how do you find these stocks? What kind of scanners or screeners or whatever we want to call it do you use? What type of settings do you go in there? What kind of what's your bread and butter setups that you get excited to see?
Similar type of question, Evan. Answer, Evan, is that I like to look at the stocks first. I've got nothing against scanners. They can be a great time saver. It's similar to dating, right? Why do you want to go out to a festival and interview 1,000 women and see which one makes sense to you? Or do you want to scroll through and say, hey, I want these people in these age group with this physical trait or characteristic or personality, and make the work a lot easier for you. And I only mention that because I did that 10 years ago, and it was very helpful in finding my perfect person to be with. But stock trading, scanners can be a great way to reduce your workload. When I'm looking at stocks, again, I'm manually going through a large list of stocks. On my screen, I have a weekly chart, a daily, a 65-minute, 30-minute, 10-minute, and a 5-minute chart that I'm looking at. And I just quickly go through those. So if those are the ones that are on my list. But let's say a new sector heats up. Let's say, I've kind of had my blockchain. I've got a list called blockchain, and I haven't paid a lot of attention to it simply because these stocks have been in downtrends for a while. But recently, they've really started to perk up again. So I look at that list and I say, okay, I've got the top ones in there right now, volume wise, are Mara, Coin, Hut, BKKT, BTBT. So I'll go through those so kind of going back to what Caleb was saying, I guess in a way, Caleb, I do that as well. So if I notice that Bitcoin is popping up, I will go to my sector list that I've cultivated. And then I'll look to say, and then I might even take, one or two of those names and I'll go over to StockTwits and I'll type that symbol in and see what other stocks people are talking about. That if SOUN is strong, what else are they talking about? They're talking about BBAI. They're talking about whatever other AI stocks, POAI, and I'll sometimes go through those and just look at the symbols that people are talking about. And if it looks like a good chart, I simply add it to my list. And if I'm going through my list that I hadn't looked at my Bitcoin stocks, or blockchain stocks in 3 months, I might look at that and say, wait a minute, this stock only trades 60,000 shares a day, average volume. I'll kick that one off my list. So I'm always adding and subtracting to my lists so that I've got the things that are, fairly liquid and hopefully in play or about to be in play, like CLSK is maybe about to be in play while Mara and Riot are in play.
Let me pull in Jaguar. We haven't heard from you yet. Jaguar, we have the pleasure of having Brian on, obviously, today. I think you guys are familiar with each other. Do you have any questions or thoughts on the current market here for Brian?
Good afternoon, everybody. I just have one question for Brian. Brian, is this Anchor VWAP study, can we do this in Thinkorswim? Is there a script for that? And if so, can you direct us where to get it?
There are some scripts out there. The guys from, what's their name? I always forget their name. ThinkScript, they've written some. And there are some publicly available ones as well. I don't use charts on Thinkorswim just for that reason. I think that they're just unwieldy and very difficult. I would say, if you're not looking to add a new charting platform, or at least the expense of a new charting platform, get a free account at TradingView, because you can use the Anchored VWAP point and click very easily on TradingView for free. But Thinkorswim just kind of, I don't like their charts.
Fair enough. And I do have TradingView as well.
There you go.
I haven't actually used TradingView since I pretty much stopped trading cryptos about 1.5 years ago. The last time I traded any crypto was back in late 2021. So it's been a long time. But that's when I was using TradingView because they had all the crypto charts available there.
Yeah.
But you can't pull them in at the time, at least. You couldn't pull them up on stock charts or on Thinkorswim or anything. So TradingView was the only one. But I'll go back to it and see how I can implement Anchor VWAP there. Interesting discussion. Yeah. I have to check it out. I'll be candid. I have not looked at Anchor VWAP as much as other people have, but I'll definitely check it out.
Cool.
Hit me up, Jaguar. I'll set you up with a copy of Trade Ideas to play with. We can chart it, and we've got some custom scans that we've built in as well. So yeah, just hit me up.
Perfect. I'll definitely do that.
Hey, Brian, what do you think about Celsius CELH here?
Celsius is a tough trader for me. I mean, it's basically at all time highs here, but it's just a really choppy stock. I love their revenues, their earnings, and their chart pattern, but the stock doesn't suit my personality. It's too gappy. It's too choppy. The ranges are too big. I can't really control risk very well in that name, so I watch it and I kind of cheer for it, but I don't really. I haven't done well with it because of the volatility. I mean, there's yeah, and that's something a lot of people don't talk about as well. Is what's the personality of the stock? Does the personality of the stock make sense to you? And I'm looking at a chart, just of the last 20 days or so, and I just see all these big spikes back and forth, and then it comes back in, and it's it's just it doesn't suit my personality basically.
That's a good point. Yeah, it definitely does like to chop around. Sounds like you're looking for more of those smooth trends. Right now, one of the other things that has been pointed out back by actually, so Michael Naus got me looking at Ion Q. I'm curious if you've seen any of these SPACs that basically came out, popped, got absolutely destroyed, and are starting to come back now and are looking at any of those for pops.
Yeah, and I, constantly talk trash about these SPACs because they seem to go to 10 and then they stall out again. IONQ is one of those. HIMS is one that was a SPAC that, kind of ran a little bit past that 10 and then just, kind of got stalled out there again. There's a number of other ones that I was looking at recently. They don't come to the top of my head, but I just have a hard time trusting those names. IONQ has a great looking chart, although the last month it's just kind of consolidating in this 9 to 11 range, so it's a pretty big range in there. Um, I always look at a company, and if it's a SPAC, I take a few points off. One that I kind of like the look of right now is PCT, Pure Cycle Technologies. And I actually just looked at their website yesterday, and they need to update their homepage first of all, because they said in 2022 we're going to open our first plant, and they just opened their plant 4 days ago, and they haven't updated their homepage. That makes me a little suspicious. But they take plastic and they make it into those little pellets where they can recycle it, and it looks like it's a real company. But they did a SPAC back in 2020, and here we are just kind of right back up to that $10 level. We saw Rum was a SPAC that came up and popped through that $10 level 2 weeks ago, got up to 11, and then got pounded back down to 9. It had a really nice base. It appeared, it broke out, and then failed. So I always take points off for things that were a SPAC.
Yeah, definitely fair. They certainly haven't performed like people would hope. Hey, quick, I know we have you for about 5 more minutes. Quick plug, you do have your book in your bio. It is an amazing book for anyone that's looking to, one, add a new trading book to their repertoire or learn about technical analysis using multiple time frames, specifically using Anchored VWAP. What would you say, when people read your book and they're beginner, what are some of the biggest takeaways they get from it? What are like the massive high-level lessons that you're trying to impart through your writings?
Beginner book, I would say, if you're going to start with the new book, then first go to the appendix, because in the appendix, there's kind of a little basically catch up on, stage analysis and, understanding the cyclical flow of money in the market so that you learn how and why, stocks and markets trend and the not the predictability, but the tendencies for markets to do certain things at different stages of their life, and get into rhythm with that, not just and understand that there's technical analysis using multiple time frames. That the reason for that is we have different trends at different times. The market's in a powerful uptrend, bull market. Well, if you bought 6 days ago near the highs, if that's your first foray into the market, you think the market sucks. It does nothing but go straight down. Whereas if today was your first day, you're like, hey, making money is easy. It's a bull market. It's great. So look for that trend alignment and recognize the trends within the trends, and know what your Well, risk management, basically, because I've spent a lot of time in both books on risk management, and keeping your losses to a minimum.
Absolutely. That seems to be the top piece on watch. Okay, I'm going to, yeah, unless somebody else had something there. I couldn't tell, someone else unmuted. Brian,
Hey, I mean, I do have
oh,
a question.
yeah.
Brian, do you think it's possible for a trader to really kind of be doing this 10, 20, 30 years without blowing their account up at least once? You think you kind of
No,
need that lesson?
no, I haven't been able to.
Have
Um,
you seen anyone who's really been doing it for a long time who didn't blow up at least once though?
not that I can recall, no.
Yeah. I think
But
Stock Talk put out a really good tweet recently. It was kind of like, your losses early are lessons, and later on it's overhead. So if you have that, if you blow up early, it's good. That's what you want.
it is, and I can tell you this at this stage in my career that, I mean, knock on wood, I don't see how I would ever put myself in a position to blow up. I've learned those mistakes, and you learn them young when you have a small account. I'm 55 years old, so I'm thinking about preservation of capital and making sure I don't have those down 20% days. To me, that's, it impacts my net worth and my mental stability too much. So, blowing up is not an option for me anymore. When you're young and you're bold and you're testing things, you probably should blow up. It's a good experience, and it sucks while you're going through it, but and it's not advice to go out there and do stupid shit and blow up, but you'll learn great lessons from it.
Awesome. Good question there, Evan. Appreciate that. I do have one, actually two more that I do just want to get quick thoughts on because
Yeah, go.
we've talked about Apple in a number of these pieces, but we haven't really talked about so much on the indices themselves. So I would love to get, on SPY here, you talked about at the beginning, but obviously QQQ has been the leader, and QQQ is not that far off of its highs, right? It's a very small pullback at this point. It's less than $10 right here. It is surging right now. QQQ is only about, I mean, I say only, but it's about $50 off of all-time highs here, and it's really, I mean, just made this massive comeback, running about $100 per share since the beginning of the year. On this, this one, the 21 is a little bit closer than SPY was, right? We basically just bounced right off of that on the daily. We're
Yep.
way above the 200, way above, any anchored VWAP from all-time high. So where would you look for a bounce on something like this? Would it be just coming back down to that 355 level where we have, price action from a couple of weeks ago? Or is there something else that you're watching?
I think, that today's action kind of says that if we pull back to 355, there's a bigger issue. That today should have put a little bit of a stamp on this. That now I'm looking to see if 362-ish, I'd be concerned if we pull back more than 362-ish by the end of this week. I'd like to see it build, pull back to 362 or so, create a little higher low, then break past, 365, and then I think it would be off to test the highs of last week and continue to move higher in this move because we've come down to the logical spot for buyers to emerge at the 20-day moving average on the Nasdaq, and if it were to fail there, I think it would send a message that it needs a deeper correction, and that deeper correction might be, like you said, 355, or if things got really bad, the anchor from the late April low would bring it to 343, which is where you'll see that 50-day moving average come up and meet it as well, because the 50-day moving average is at 339 now, but it's rising obviously. So I'd like to see a small pullback tomorrow, and then we finish out the rest of this week, and head towards that 372 level.
All right, feeling bullish. Okay, Brian, we're here obviously at market close. I want to be respectful of your time. I'm not sure if you do have to jump off here, but we usually go about an hour. Is there anything else, big takeaways, insights, other favorite stocks, anything else that we haven't touched on that you would want to share? And then do you have to hop off, or are you sticking around for a little bit?
No, I do have to jump off, and I thank you guys for doing these. They're always educational, and what a tremendous resource you are for, newer traders out there trying to wade through all the bullshit. That keep doing what you guys are doing and sending the message of risk management and not fighting trends, and listen to people like Lund, who's on here all the time, and also Michael and Jaguar and all these guys. I see Austin, I see Jack in the comments or down below. A lot of quality people here that are worth listening to, and you guys do a great job of shining light on the good actors in this space.
Thank you so much, Brian. If anybody's not already following Brian, make sure that you do so right now, and also make sure that you're checking out his book in his bio. Pleasure having you on today.
Thanks, guys. Take care.
Absolutely. Okay, we are into market close. By